Hey traders, this is Blake Morrow with Trader Summit, and with me today I have Jim Welsh from Macro Tides, and we've had a little bit of a hiatus over the last few weeks. It's nice to see you again, and boy, have things changed or what?
Well, yeah, for a lot of other people who weren't paying attention, quite honestly, and not wanting to sound too obnoxious, but the Fed has been telegraphing, Blake, that they are serious, and that's what I've been writing about for months. Actually, I was looking in mid-January, I wrote a piece that the Fed would be wise to raise rates March, May, and June because that was easy lifting and to get out ahead of this. And now, yeah, they're doing it, but we're talking 50 basis point increases instead of 25.
You don't
surprised anyone.
You talked about front loading, Jim, and this is not something that hasn't been heard by you here on Trader Summit during our weekly interviews, minus the last couple of weeks, obviously. But in our normal interviews here, you've been talking about front loading hikes, and it seems like it just got the attention of the market this week. So what changed between what we've been hearing from other Fed governors? What's changed here?
Well, I think, again, this is somewhat mystifying to me, Blake, because we've seen a number of presidents of districts come out and talk about a 50 basis point hike. Lyle Brannard, who's the vice chair, endorsed one. John Williams, a few days ago, came out and said he's the New York Fed president. So in the pecking order, those are the number 2 and number 3 people. And Powell has made comments in terms of it being on the table. So to me, it's just sometimes I think people are so distracted and they really don't pay attention to what all the different Fed members are saying. And even some of the more dovish people have been on board. So I think it's just one of those things people weren't paying attention for whatever the reason. And yesterday it's like, holy Moses, these guys really believe it. They're going to do it, which is the amazing part to me, Blake, because with inflation at 40-year highs, the Fed doesn't have a choice. They really have to move aggressively. And as I pointed out in January, going from 0 to 1% is the easy lift because it's not going to have a tremendous impact on the economy. And I think that's what they're going to be doing.
Well, looking at today, and I'm gonna actually pull up a chart that you'd submitted to us today.
Yeah.
And, let's talk about the S&P, because the S&P is really under pressure here. We're trading, near 43.25. Markets have really come down. We've broken some near-term support. How do you feel about where we're at right now in the S&P? How do you think we're going to see that? I know you've talked about us targeting below 4,100 for a final low. Is that still in the cards?
Absolutely. Again, over the last probably month or month and a half, as we've been talking, I noted that the rally from the 41.15 low back in February 24th was an ABC. And as we got into the first few days of April, it's like, okay, we're going to have a pullback here. And I told subscribers in January to buy if the S&P was under 41.50 and to sell when it was near 4,600. So as we backed off from that 4,600, there were 2 paths. One, that this would be a wave 4, and we're going to see a rally above 4637 and then see a deeper correction. Or, hey, that's an ABC up and we're going down. Over the last 2 weeks, my comments have been that given what the Fed is saying and what they're going to do, not just with rates, but with their balance sheet, that the odds had shifted and that the S&P taking out 44.50 to me was important. And it tipped the odds that, no, we're going to go down to that 41.15. And as I pointed out, the 382 retracement from the March 2020 low at 2190 to the high in January of this year at 4818 is 3850. So to me, that is on the table as people start to realize that the Fed is in fact going to raise rates. And as I discussed in the April macro tides, if you look back to 2018, the last time the Fed tapered their balance sheet, that was on balance a tough year for the majority of stocks. And ultimately, the S&P dropped 20% before the Fed reversed their policy. So again, don't fight the Fed is a good saying. And, we're here. And the Fed is more serious than it's been in a very, very long time in terms of combating inflation.
All right. Well, before we shift gears, I just want to say, if you guys and gals like what Jim Welsh does here every week, with us at Traders Summit. Make sure you give him a thumbs up. If you're watching us on YouTube, subscribe to the channel so you don't miss any of this exclusive weekly commentary that we have with Jim. So I just wanted to mention that. Let's shift gears a little bit and talk a little bit about what we're seeing in yields. How are you viewing yields at this point? Because it seems like they are going to peak here soon. You've got a lot of big banks that are calling for that, but
right.
What do you think?
Well, I think, what I've outlined is that there's a progression that happens technically in terms of when a top or bottom is developing and then takes hold. One is start to look for RSI divergences, where in this case, yields making higher highs, but the RSI isn't confirming. And you can see over the last couple months or so, or 6 weeks, as the yield kept going up, hey, all the new highs were getting confirmed. We're finally seeing the first signs that we're seeing higher yields, but the rate of ascent is slowing. So that's what the RSI is telling us, that the pressure to push yields up is starting to dissipate a little bit. The other thing is on the chart there, the red line is a 5-day exponential moving average. The green line is a 13-day. So what I want to see is, we'll see some sideways thing, and ultimately the Treasury yields will come down enough that it pulls the 5-period exponential average below the green line. And
would that signal
like
there's a straight up reversal, Jim, or is that going to just tell us that we might see a little bit of a pullback?
I think the potential here, Blake, is the economy is definitely going to slow. I mean, Powell has said their goal is to dampen demand. Since they can't do much about supply side, they're going to dampen demand. They're going to get their way. We are going to get data over the next 2-3 months that will progressively show things are slowing. I think that's going to be supportive, at least for the bond market. In addition, if the Fed follows through, as I think they will, they'll raise it 50 basis points at the May 4th meeting. They will set the table for another 50 basis point hike at the mid-June meeting. Well, the bond market's going to say, hey, wait, the Fed is really serious and we're believing this. And I think so that to me sets up the table for a pullback in yields. I think the 30-year, 250 was an important level. It's pushing 3%. So could the 30-year in this environment drop down to 260 or so? Yeah. But so I just think that we're seeing the first technical signs that the up move is starting to run out of steam, and they're approaching round numbers, as you pointed out. Bank of America, and I think one or two other banks are starting to say, hey, wait a second. Yields are now providing us a decent rate of return relative to the risk. And I think pension money is going to follow that.
Well, that's a bold statement, especially after the last 30 some odd years, but let's see if that takes place. So I'm going to turn everybody's attention over to the euro. We got a French election this weekend. Euro's trading, below 108. Are we going to close? Let me ask you this. What do you think? First of all, what do you think is going to happen for the French elections? And is it going to matter? Are we going to have is Macron going to have a Trump type of moment, or Le Pen maybe have a Trump type of moment? What do you think here?
Well, Macron is going to win. And whether or not he, it's a landslide, to use US terms, I have no idea. Okay. But that removes at least one measure of maybe uncertainty. I think the bigger thing, obviously, is the dollar. And I've been looking for the dollar to rally above 100 and then set a peak. And, the rally has pushed, it's above 101, but it doesn't change the outlook. If you look at positioning and sentiment towards the dollar, it's really, really bullish. So we're seeing some extremes there. And of course, the opposite side, a lot of negativity towards the euro. The trend line goes back to a multi-year lows. And we're trying to hold that. The euro has made, we just talked about, hey, if you're looking for turns in markets, you look at the RSI as like one of the leading things to tell you might be nearing a turning point. Look at the euro's made lower lows, and the RSI is way above where it was in early March. So these are all, in my opinion, signs that, I think the euro is near a trading low. When we last talked 3 weeks ago, 108.50 was like, I think that's a good place to go long. And I still believe that. I think over the next 2 months or so, the euro has the potential to rally back up towards 112, 111.50 at least ish. So I don't know what the French election will do. I don't think it's going to be a negative. Let me put it that way.
So let me ask you this, since you talked a little bit about the dollar index. What is the technical level that you're looking at where you should say, look, I need to be short dollars? What level is that for you on the dollar index?
I think anything over 101.
Okay, so you wouldn't be chasing it lower if it broke, let's say 99.50.
I would add to positions.
Oh, okay, all right,
Okay,
fair enough.
So I mean, to me, it's kind of like whether it's a 1/3 position, 1/4 position at this level, and then for a daily reversal, add a little bit more. And obviously, as you pointed out, and I've noted in my letter, getting below 99.50. I haven't looked at the chart the last couple of days, Blake, so they might be able to make it a little higher, more like 970. Not that that's a huge difference, but I really think the odds are we're going to see the dollar roll over. In part, everybody gets, hey, the central bank's raising rates, that's good for the currency. But at some point in time, the emphasis shifts. Wait, U.S. economy is going to slow. And as we get data showing that we're going to be slowing, I think that's a negative for the U.S. dollar. All I'm looking for is a pullback to 95, 96. So I'm not, one of these, oh my God, the dollar's going to lose its reserve status.
Right.
You've had a big move up. To me, this pop above 100 was wave 5 of the rally that began months ago. So we're nearing the completion of something. And that area around 95, 96 is wave 4 of lesser degree. That's all I'm doing.
All right, Jim. Well, I know I appreciate your thoughts, and I know the traders here at Trader Summit really appreciate your thoughts as well. And so again, if you guys are just watching Jim for the very first time, make sure you're giving him a thumbs up on this YouTube video, subscribe to the channel. And Jim, how do I follow you as a trader?
Macrotides.com is the website. There's information there in terms of how to subscribe. We can look at some old letters and so forth, some analysis that I provided on various markets going back a number of years. If you would like to get a current issue of either the weekly technical review that comes out on Monday or the April macro tides, just send me an email. That's the easiest, quickest. I turn it around quickly. Jim Welsh Macro at Gmail. And I'll send you, because you're a faithful listener to Blake Morrow and Trader Summit. Oh,
well, that's not faithful listener to me, faithful listener to you. So Jim, thank you so much. Thank you so much for joining us today. And have a wonderful weekend. And we'll see you next week.
Sounds good, Blake. Take care, buddy.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.